Thank you for joining us. Today we're going to talk about something that doesn't really apply to everybody, but for those that it does apply to, I think this will be really helpful and take some of the frustration out of applying for a loan. We're going to talk about the personal financial statement, which is a part of our loan application. It's a part of almost any loan application that you fill out, personal or business. So they're going to want to know these things. And this is, well, here, we'll make this easier.
So I want to start out
Yeah.
just to chime in because you're going to be doing most of the talking today.
Okay.
I do want to chime in and say that this is not a SKED form. This is, as you can see in the PowerPoint, this is a small business administration form.
Yeah.
I mean, they are the ones that created it. They are the ones that updated it.
And if we could redo it and make it a little bit more understandable, we would certainly do that. However, we are required to use their form. So we're going to make a video about how to use their form.
Yeah.
So hopefully it's helpful. And I'm hoping that Karen, our loan officer, is going to jump on here because she has a lot more experience with this particular form than I do, and hopefully she will be able to answer questions that I can't. So if you're here, Karen, just say hi. This is what the personal financial statement, SBA Form 713, looks like. It is 3 pages long as far as information that you need to fill out. It's actually about 6 pages long with notices and disclosures and all the legal stuff that goes along with it. So when you first get this form, it doesn't look terribly overwhelming. It is a little bit, but once you kind of get into it, it starts to get overwhelming. So really what we want to do is go through this step by step to make sure that you understand what they're asking in each section, what to put where, and how to make all of the numbers work out the way that they're supposed to.
Absolutely. Before you continue, ProTrade has joined us this
morning. Good morning, Jen. How are you? Oh, thank you for joining us. All right, so this is section 1. This one should be pretty easy. This is basically at the top. Can they see my mouse, Kyle?
No.
No. Okay. So at the top, you've got U.S. Small Business Administration. Then it says as of, and there's a blank. This is the date that you're doing it.
Oh, they can't see your mouse. You're good.
They can?
Yeah.
Oh, sweet. So right here, you've got where you'll put today's date or whatever day you're filling out this form. Down farther, you have name, business phone, home address, home phone, city, state, zip, business name of applicant. So this should be pretty easy, right? We shouldn't have any trouble with this section.
Shouldn't have any trouble with this section.
Okay, let's move on to the harder sections. This is where you're going to first start to get frustrated. So this section is basically asking you on the left side what your assets are, and on the right side what your liabilities are. So assets are things that are things that you own, cash that you have, stocks, retirement, real estate. These are things that are valuable. Liabilities are things that you owe for, so things that you have to pay for. So cash on hand in banks is pretty easy. You just add up, if you got a checking and savings account, you add those together, you put that on the first line.
Yeah.
Remember, this is a personal financial statement. This is not your business financial statement. So this is for you and your spouse, if applicable. I believe the way that Kentucky works, if the assets were acquired during a marriage, they are marital assets, and they have to be included in the personal financial statement. So obviously you've got savings account down below, and then you've got IRAs or other retirement accounts. So you're going to put the total here. And then in section 5, which we'll get to here in a few minutes, you are going to describe exactly what those assets are. Okay, so you're going to give a little bit more detail. Accounts and notes receivable. So this is if people owe you money. Say you gave somebody a $5,000 loan and they owe you that money. That is an asset. Life insurance. This one trips people up quite a bit. They are not looking for your policy value. They are looking for your cash surrender value. So if you turn in your life insurance policy and make it null and void, some life insurance policies will give you cash back depending on what type of policy it is. Usually it's nowhere near what the death benefit is. So, this number probably will not be huge, but that's what goes in the life insurance cash surrender value. Again, in Section 8, you're going to go into more details there. Stocks and bonds, if you own any stocks and bonds, you would put the value there. Real estate, this could be your house. This could be a rental property. This could be a commercial property that you own in your personal name. Could be any of those things. Again, add up the total and you put it in this box on the first page. You're going to put more details in Section 4. Automobiles, same thing. Just put the total here, and then in Section 5, you're going to put more information. Other personal property, say you have a coin collection that's worth a significant amount of money, you could put that there. Or any other valuables that you've collected. Maybe you collect art, and there's value there. You could put that there. And then other assets. So this is kind of the column where if every something that you have doesn't fit in any other section, you would put it here. And then you're just going to add up all of those numbers to get your total, which is just the sum of your assets. So once you get the assets taken care of, we have to move over to liabilities. Accounts payable. These are, do you owe money to someone, or we're not going to put credit cards here. We're not going to put loans. We're not going to put houses, things like that. We're just going to put kind of, things that don't fit in the other categories. So notes payable to banks and others. We're going to describe this in Section 2, but this could be, your house payment. This could be this could be a home equity loan. This could be, if you've taken a cash advance or something like that, it would go here. Installment loans for your auto, you're going to put the total that you owe on here, but then you're also going to put what your monthly payment is right on this line right here. Okay. You're going to do the same thing for installments on other accounts. This could be credit cards, could be, any other type of loan that you have. If you've taken any loans out against your life insurance policy that you have to pay back, you could put that in the next line. Your mortgage on your real estate would go on the following line, and you're going to put more details in Section 4 here in a minute. Unpaid taxes. So if you've gotten behind on taxes and the IRS has set you up, or the Department of Revenue has set you up on a payment plan, that would go here. Other liabilities, so these are things that we've not covered in any other section. You can put there, and then you're going to add up your total liabilities. So that's just the sum of the numbers above it. The next line, the net worth, I think is what confuses the vast majority of people. And nowhere on this form does it help you understand what you're supposed to do here. So really what your net worth is your total assets minus your total liabilities. Okay, hopefully this number's positive, but it's not always.
No, it's not always.
So you're going to put that there. And then you've got to get the total. And the way that this is basically a balance sheet.
Yes.
So your assets have to match your liabilities. They have to balance. And that's a confusing thing if you're not
used to that.
Right.
Because it scares you a little bit. I got
it,
this many assets, but I also have the same amount of liabilities.
That's the way that it looks, but that's not really what it is, because you throw your net worth in there, which is from your assets. So basically you're going to put your net worth, which again is your assets minus liabilities. And then to get the total, you're going to take the sum of your liabilities plus your net worth. That's going to equal your total assets. And the total in the liabilities column and the total in the assets should equal. If they equal, you've done it correctly. So those two lines are what throws the vast majority of people up on this worksheet. So let's go to the next section. The next section is going to ask you about your sources of income, your contingent liabilities, and descriptions of things in the above section. So obviously you're going to put your salary, and if you're married, you put your spouse's salary in there as well. Net investment income, this could be you've invested in a business and this could be dividends from stocks. It could be, that you're getting monthly checks from those investments. Real estate income, if you own rental properties, you would put that information there. And other income, so any other places that you make money. And I believe these are looked at annually. So we're supposed to put the annual salary. So Karen, if you're on here and that is wrong, please correct me. So contingent liabilities, this is if you have co-signed for your brother-in-law's car loan. That is a contingent liability.
I was going to ask that.
Yeah.
Because I know that's a common thing.
Yep. Yeah. If you've co-signed on somebody else's loan, at the end of the day, you will be held responsible if they don't pay. So that has to find its way onto your balance sheet.
Now, is that the full amount or the amount at filling this out?
The amount at filling this out, because that's all you're legally responsible for at this point. And obviously that changes. Legal claims and judgments, if you have, a judgment against you and you are ordered to pay X number of dollars, that would go there. Provision for federal income tax, if you know that you're going to have to pay federal income tax, and you can put that in there. Other special debt, I can't really think of an example of what would go in there, but and then you put a description of other income in section 1. Obviously, we know what a salary is. We know what investment income and real estate income is, but if you have things in other income, we're going to need some more details on that. We want to know what that is.
Yeah.
So you'll put that in there. Next step is, I forgot that I did this. Sorry. I broke this down a little bit more, and I actually put some notes in there about what each of these things is. So other special debt, the total amount of any other outstanding contingent debts not listed above. Provision for federal income tax, the amount of money that you're setting aside to pay federal taxes for an expected increase in income due to whatever. So you can put all of that in there. And then in section 2, we're going to talk about our notes payable to banks and to others. So this is where we're going to put the information about who holds the note. So who are you making payments to? You're going to put the original balance here, your current balance, what your payment amount is, how often you're paying it, and how it's secured. So what type of collateral? Obviously, if it is, say you have a home equity loan, then they would probably utilize your house as collateral. That's typically how that works. So fill out this section. I just shook the camera, I'm sorry. Section 3 is all about stocks and bonds. You're going to put the number of shares that you own, the name of the security, how much it cost, what its market value is, so what the price is today, and then the date that you calculated its current value, and what the total value is. So number of shares multiplied by its current value. So pretty self-explanatory there. And in all of these sections, if you need more space, you can attach additional sheets of paper. So step 6 is your real estate. So this is fairly self-explanatory. You're going to talk about the different properties that you own. What type of property is it? We're going to put the address, the date that you purchased it, what you purchased it for, what it's worth, who holds the mortgage, what's the account number, the mortgage balance, the amount of payments per month or year, and the status of the mortgage. Is it in good standing? Are you delinquent? Where's it at? So there's a little bit more information on this. You know, if you're in foreclosure on the status of mortgage, you would put it there. If it's paid in full, you could also put that there. Fairly self-explanatory on this one. I don't think too many folks will have too much trouble with that. So other personal property, section 5, we're going to list assets which include a value. You know, if you own a stake in the business that you're applying for a loan on, you can put the value in here. If you own a stake in another business, you can put that there. So these are other personal property and other assets that you're going to claim as assets on your financial statement. Does that make sense?
Yeah.
Okay. Unpaid taxes. So some people assume that if they have unpaid taxes that they are not going to be eligible for federal loans.
Okay.
That's not always the case. If you have worked with the IRS or Department of Revenue and you guys have put together a payment plan that you are sticking to, it's not going to automatically knock you out of the ability to get a loan. It doesn't help, but it doesn't knock you out. So make sure that if you are delinquent in your taxes, that you have a payment plan, that you have worked with the taxing agency to get that, and that you are sticking to that payment plan. So you're going to describe all the details about any unpaid taxes in this section. And that includes, you know, what type of tax it is, who you have to pay it to, when's it due, what's the amount, if it's attached to a property, any tax liens, anything like that. Any important details are going to go in this section. And then we move on to step 9, which is other liabilities. You're going to describe these in detail. And these liabilities often don't fit into the other categories, such as debt owed to this could be things like debt owed to foreign governments, private agreements, things like that. Put as many details in here as you possibly can. I'd say probably 85-90% of the folks we work with won't have anything in this section.
No, but you know, the private agreements, could you argue that, you know, family loans are part of that?
You could. Yeah, if you loaned money to, or if a family member loaned you money, yeah, they probably should go in there.
Yeah. Now here's the thing that I would say is if you've done that, it says how much you owe in your repayment plan. Please don't put when I can afford it.
Yeah. Yeah, we should probably have a plan. So, life insurance. So in this section, you're going to talk about your life insurance policies, including the death benefit in this section, what your cash surrender value is, the names of beneficiaries, and the name of the life insurance company. So put some details in here about your face amount of your life insurance policy, but also what your cash surrender value is. That cash surrender value was included on the first sheet of this, but not the death benefit. So last but not least, so that is it for the difficult sections of our personal financial statement. It's not super complicated. It takes a few minutes to get all of the documents together. So it is recommended that you print off your bank statements. You print off any investment statements. You print off any liability statements. So credit cards, car loans, mortgages, all of those things. And get all of those things together in front of you.
Yeah.
Because it is easy to leave something off of this unintentionally. And, you know, your credit report is going to show what you owe money on anyway.
Yeah.
So, for any lender, it makes them feel better if what you put in there is complete.
Yeah, and you know, then like I said, it makes them feel better. Also, if you forget something but it shows up on your credit report, you're going to be asked about it.
Right.
Why didn't you include this?
Right. Where was this?
Yeah.
So go ahead and try to double check everything and make sure that you're not forgetting anything. It's a good idea to go back through your check register and see who you paid bills to in the past month or two to make sure that you got everything in there. Last but not least, we have to sign it. So we have to sign page 3, and we have to print our name. We've got to put our date and social security number. If you are married, you will have to have your spouse sign this, because marital assets in Kentucky are included in this, and we do have to have your spouse's signature, even if the loan has nothing to do with your spouse. So,
And Karen just followed it up and said, make sure to mention signing it, including spouse. So.
yes, woohoo! I get a cookie, right? So, I mean, that is the personal financial statement, and we went a little quick today because
apparently you don't like personal financials as much as you do business plans.
that's true. Yeah, I went way long last week, so I'm making up for it. But on the screen here, you can see if you need more help, you can contact SKED. I put Karen's email first because she knows a lot more about this than I do, and she's a wealth of information and will be able to help answer questions and figure out where things go if you're still confused. You can also contact me, or you can contact Kyle.
And thank you all for joining us. Y'all have a great day.